Welcome to another video in this Forex trading training series brought to you by forexminute.com. This is video number 14, Chart Setups Part 1. In the last 13 videos of this course, I have taught about price behavior, how price trends, how price ranges, and I taught about highs and lows of trends, Japanese candlesticks, engulfing candles, pin bars, and doji candles, and just how powerful these signals are, support and resistance, horizontal support and resistance, dynamic support and resistance, and trend support and resistance, including the support and resistance that can be created by channels. I also taught about moving averages and how moving averages can show us the longer term bias or momentum in the financial markets, and also how a moving average crossover works. I have covered a lot in these last 13 videos. If you have questions about any of these topics, or any of them seem slightly confusing, or you're completely oblivious to what one of these topics are, please just go back and watch videos until you feel comfortable with each of these topics. As from this video on, I'm going to start combining what I've taught to show you how to trade profitably and make money from the Forex markets. And the way I'm going to do that is to show you some chart setups or some setups in the Forex markets you can take that more often than not will lead to profit. Now, I do have a bit of advice for chart setups, and that is never open a position, never go long or short in response to a single signal. So if price has reached a dynamic support, don't just go long. If a candle closes and it's a bearish pin bar, don't just go short. This Forex training series is about technical analysis, and with technical analysis we analyze financial markets. There's a bit of effort involved. It's not looking for single signals that are going to lead us to failure. So I would suggest to always have at least two signals or two reasons why you open a position, but please remember, the more the better. If there are 3, 4, 5 signals, that's better than just the two. So from my illustration down below, we have a pin bar. We wouldn't go short because of that bearish pin bar, but if we had a bearish pin bar on a resistance level and our moving average was showing bearish momentum, that could be a signal to go short. We have 3 reasons there, not just the one. This is an hourly chart of the Great British Pound against the US dollar to demonstrate my teaching of not taking single signals but taking multiple signals is demonstrated clearly on this chart. As mentioned, this is an hourly chart of the pound against the dollar. If we wanted to trade engulfing candles, we have a bullish engulfing candle here. We could have gone long right here and we would have made a nice loss. There's a bearish bar here. We could have gone short there and we would have made a nice loss as price went on the upside. Obviously, there are engulfing candles that would make a profit. There's a bullish candle here and price goes on the upside. There's a bearish engulfing here and price slightly goes on the downside. But as a trader, we want to make as many profitable trades as possible, and we want the profits to be large when we make those trades. So let me demonstrate how you should take an engulfing candle. First of all, let's add a moving average to the chart. A moving average of 200. It's currently at 50. Let's make that 200. Okay. And let's make that red. I prefer my moving averages to be red. Very nice. Now this moving average is going to act in two ways. It will show us the longer term bias. The moving average is currently down, so we're looking to take short positions. And it's also going to act as a dynamic support and resistance. And currently it's going to act as dynamic resistance as price is below the moving average. Price did move up. It pushed here. It was rejected where the moving average is and went on the downside. There's quite a clear change of price direction at this point, so let's mark that with a horizontal trend line. Like so. Price comes back up to this moving average, and now we have an engulfing candle that I would trade, and it's this engulfing candle here. The reason I would trade that engulfing candle is we have a number of signals. Firstly, we have an engulfing candle, EC engulfing candle. Our second signal is the engulfing candle is on this horizontal resistance, HR horizontal resistance. The third signal is this engulfing candle agrees with this dynamic resistance, DR, dynamic resistance. And then our fourth and final reason is our moving average is showing bearish momentum, that price could fall on the downside. So BM, bearish momentum. So we have four signals there. That would give me a lot of confidence that this trade could be profitable. If we went short on this engulfing candle, price fell heavily on the downside, especially after this big move here, and we would have made a large profit. You'll also notice that price only moved against us very slightly. So hopefully this demonstrates why we trade multiple signals. This trade is a monster now compared to perhaps this trade here, where we only act on a single signal and price comes down here before reversing. In our next video, I'm going to show you how to analyze price charts and to mark areas on your charts where we can expect multiple signals to take long and short positions in the Forex markets. To summarize, to be profitable trading with technical analysis, we need to analyze price charts. I've come across many traders in the past, or wannabe traders, who say they trade using technical analysis, but actually do very little analysis, and hence why they're not profitable. The more signals, the stronger the chance of being profitable or making profitable trades. Our next video is chart setups part 2, and in that video I will demonstrate how to analyze the markets each day and look for profitable chart setups. If you haven't already done so, please check out our website forexminute.com, where we provide market analysis, training material, broker reviews and more.